Hello, Jeff. Good afternoon. How are you?
Good afternoon, Sven. Very good, thank you.
Great, great. Thank you. Thanks for joining us again. Another interview. We have a few questions that we want to do in a roughly half an hour time. So let's just start. So the first question I have is, when will there be an updated shareholder presentation again on the website?
Yeah, there will be, Sven. We are waiting for a major announcement on Montalva. And as soon as we get that, we'll update the corporate presentation on the website.
Okay, great. And then if one exists, a few questions about marketing the company and branding the company. So if one exists, what's the marketing plan to help getting the word out for Greenbriar once the projects are approved, starting construction and things going on?
We have several key shareholders that, with their families, own millions of shares of Greenbriar each. These are significant family offices. As soon as I come out with news on the PDP approval from Sage Ranch and the approval on Montalva, then you'll see a lot of activity from these family offices.
Okay, great. I think a year ago there was some press release mentioning a part-time investor representative would be joining GRB. Has this come into place, or is it part of that plan you just mentioned?
Yeah, that was announced, I believe, in October of 2022. Since that time, again, that was a family office, that company. That family office has since picked up well over 2 million shares on the market.
The period for insiders has been during well over a year now. When do you reasonably expect the company can announce the end of the blackout? Or is there still anything needed to be announced first?
Definitely, for sure, we need the Montalva approval because we've been working on that, every day, every month now. When that approval happens, then we'll remove the blackout. Okay,
great. Let's zoom in on Montalva at a later stage. Another question I got was from the tokenization, the GRB security tokens. They have been announced a few months ago as being the first digitalized securities ever, like the first time ever. When do you expect the new GRB security tokens will eventually trade on the INX?
The time that we initiate the go-ahead for INX, it's a 60-day program. We had the exchange involved, the Toronto Venture Exchange. They wanted to have input into the tokens, which we did. So we went through an extensive back and forth with the TSX. The TSX has never seen anything like this before. They've never done anything like this before. So after a couple months of back and forth with the exchange, the TSX wants a legal opinion from our law firm, both in Canada and the US, that both of these programs are compliant. And we've asked the law firms to do that. The Canadian opinion is not bad. The American opinion is very expensive. The outcome of the opinion is that this is completely legal and this is within the rules. But legal opinions in the US are generally between $250,000 to $500,000 when you give a full opinion. So this is a budgetary matter that we will deal with. We just won't deal with it today. When we do and issue the opinion to the Toronto Venture Exchange, they'll give us the thumbs up, and then we can give the thumbs up to INX. And it would take about 30 to 60 days for them to list the tokens on their exchange and actually mint the tokens.
Okay, and when that's done, when it can go to INX for quotation, do you plan to do some marketing around it?
We do. INX will act as the legal securitized token exchange, and there's only one approved with the SEC, and INX is that exchange. We will do a substantial marketing program in the countries where trading the tokens is legal, which is 46 different countries, including the United States. They're not legal. Canadians still cannot buy security tokens, at least not legally. So we will operate in those countries where it is legal, and we'll undertake a significant marketing program. And INX will help us out in that as well.
Okay, and I assume it's just a guess, but maybe you can do that together with some influencers in the finance world, or do you have another approach on that?
You know, it's a combination of people dedicated towards tokens and those that are dedicated towards stock. But I think, you know, the demographic for tokens is generally a younger group of people and a different appeal level. But I think there'll be two programs going on, one regarding the common equity and the demographic that appeals to common equity, and then another one that appeals to the token. So.
Okay, makes sense. Thanks. Any update on the acquisition of the Keller Williams Forward Living franchise?
Yeah, we signed that a year ago, filed it to Gary Keller, who's the president. Under California law, he has to allow the transaction to go through. He's in mediation right now with Paul Morris, the owner of the Forward Living franchises. And they're working on other issues that are not related to Greenbriar. Once those issues are worked out, the acquisition under law will go through, and it's non-dilutive to Greenbriar. What it is his whole franchise network will go public under a new public company. He and his partners will get 80% of that public company, and the existing Greenbriar shareholders will get 20% of that public company. So we got to let them work through their mediation. Once they get through that and we close the deal, we'll file an IPO for Greenbriar Forward Living. It'll be a US listing, and the shareholders, Canadian shareholders, will get dividended out the 20% of the IPO on a pro rata basis to all the shareholders.
Okay, sounds interesting. Great to see that a lot of progress is currently on the road. Regarding Alberta and Westlake Energy, we haven't heard anything about them for some time. Perhaps the project as a whole went to the background, as Montalva and Sage Ranch probably requires a lot of your focus now. So are there any updates about Westlake and Alberta that you can share at this moment?
Sure. So Westlake initially was slowed down, as you know, with the unfortunate news that their CEO had to resign due to illness. I believe he's still officially there. What we do know for the background is that the oil and gas price, especially the gas prices, which energy prices in Alberta are very much tied to, those natural gas prices have gone down significantly. And the initial part of building solar in Alberta was a hedge against energy prices and carbon credits, but energy still played a big role. With natural gas prices down significantly, the margins in building a solar project in Alberta are very slim. So for the time being, we're going to stand down in Alberta and focus on Sage Ranch and Montalva, which are much larger and much more successful ventures from both a revenue and cash flow basis. So until that market in Alberta turns around, we kind of want to stay away from the low yield solar plays, and that's you know, due to lower natural gas prices, unfortunately. That is all Alberta has available. So you see a lot of activity in Alberta, but those returns on equity are, you know, single digit, 7-8% returns. So this is something that, you know, we know our shareholders are not interested in.
Okay, thank you for that update. Now getting on to the topic of Montalva, I'm sure we all want to see Montalva moving forward, but at this stage is still somewhere at PREPA. So what will happen, Jeff, worst case, if no settlement agreement can be reached with PREPA? You've been trying for quite some time to reach a settlement. Lots of things are going on behind closed doors. But what would happen in worst case? So no settlement agreement. will the earlier obtained court order damage report for $190 million dated 2017, is that still be valid? And if so, is that part of a plan B if plan A doesn't pan out? What's your take on that?
Well, plan A will work out.
Okay.
Yeah. So, and plan B is what's keeping plan A going. So that $900 million lawsuit against PREPA is a contingent liability on the books of PREPA, and all the creditors and all the parties, including the US government, do not want that $951 million lawsuit to go forward. So that and the other issue in terms of us having the best agreement and the best project for the island is three of the key reasons why this is not in the we're not in the tranche process, RFP process. We're in a special process with PREB, the Puerto Rican Energy Bureau, and we work with PREPA daily and key players on having this settlement, which is basically allowing us to build the project under our original agreement. That will come to a successful conclusion. So plan B is the reason why plan A will happen. So it's better for Puerto Rico to allow a solar project to go up than it is to pay a $950 million lawsuit or even a $200 million lawsuit. And the other thing I just want to mention is the public RFP process, as we stipulated 3 years ago to the oversight board, when we were slighted in knowing that the government said our project's number one, but then when it came down to the selection of two projects, they picked two, let's just say two inside projects. The issue with that was that public process, we had told the federal government would not work. It would be too expensive and none of those projects would get built. So here we are, we've had tranche one, we've had tranche two, and now we have tranche three going in November. But guess what? There's only one project that's under construction, and it's the project, one of the two projects that was chosen back in 2020. So there is no public tranche project, RFP project going forward. One reason is the language in the agreements are wrong. You can't build on them. Number two, because you can't build on them, it was a great embarrassment. So those developers went back to PREPA and asked for higher prices. They gave them higher prices, but now what's being undisclosed, the public doesn't know, is that those higher prices is actually affecting the oversight board in terms of its decision to say, look, you know, these prices are way out of control. So it's sad that we had to be the ones to say this wasn't going to work out. But because of that, it puts our project in a position where we had the better pricing. The pricing was good for everybody. But what's more key is the language to actually build the project. PPA language is very specific, and you need specific terms that allows you to get the financing to build them. And that language was not in the public RFP process.
All right, thank you for that explanation. So plan A is to pursue the original PPOA then, I think.
Yeah, we've been doing that for 3 years, and we've had full indications now that there's several key elements within PREPA that want this resolved, meaning to allow our project to go forward. And there was a few holdouts that were, tied to the old system. And we do know that as of June 30th, those people have retired from PREPA. But in any regards, it's really a question of economics. Who's got the better project? Who has the best pricing? And the proof is in the pudding. 3 years has gone by. They've had a RFP process with two tranches, now a third tranche coming up. Nobody's building on those tranches. So the public process system has failed. In fact, the governor wrote to the US Senate several months ago and said that the language in the agreements are not financeable. So we knew that as well. I mean, there's elements in the island. Yeah, you have to look at the background of the island. 60% of the island generates its electricity by burning oil. And as you know, the oil lobby is very, very strong. And as much as the oil lobby is strong, it doesn't do the ratepayers any good, because burning oil in old-fashioned steam plants that were built in the 1950s and 60s based on 1930 technology, their cost of energy is over 40 cents a kilowatt hour. So they can't get solar for 2 cents like people in Arizona can, but they definitely can get solar for 10 cents or 11 cents. And when you get solar for that price in Puerto Rico, you're getting it for 25% of the cost of burning oil. So it really is an economic perspective. And it's just having enough eyes on the deal right now, especially the political climate, knowing that none of these public RFP projects are even starting construction. So the RFP process has been an utter failure. And we're very grateful that we chose to take this battle to the regulator and not do it through the public process.
I see. And last time we've met, Jeff, you talked about that there was only one signature required at PREPA. That has not happened. What has obstructed that signature? What's happened behind the curtains? And what's the plan?
So that person has retired from PREPA.
Oh,
so
okay.
Yeah, so there's new staff members coming on, and those new staff members are being updated as to Montalva. We do know as a fact that the legal team within PREPA instructed the executives in PREPA to approve the agreement, and we know that the outside legal counsel for PREPA 2 advised as well. And we do know that the last president of the board of PREPA instructed the legal team to sign the agreement. So there was one holdout that was there in PREPA. That person has since retired, and we do know that there's a new board president and there's a new staff that are in. And those decisions on approving the project will be now passed to those people. And we are working with all the appropriate parties in PREPA to have this project approved. And when that happens, we will issue the news. But we feel strongly that Plan A, which is PREPA endorsing the agreement, will happen, because the consequence and the risk to Plan B is not something that the ratepayers or PREPA want to pay, right? So this is just a simple decision that's really not complicated in any other part of the world. Build a big solar farm that's better for the population, that gives a better value on prices. It's good for the environment. That's normally a logical thing to do, but Puerto Rico, unfortunately, for many years has been influenced with the oil lobby, because 60% of their generation has come from oil purchases. And that lobby was very strong, and that lobby influenced, obviously, the oversight board 3 years ago, because the president of the oversight board at that time, Natalie Jaresko, worked for oil and gas interest in a previous life. So, or had really relationships with oil and gas interests. So we are extremely excited about the new management at PREPA, and we feel that Plan A will work out, and you'll see a signed agreement.
Okay, great. On the topic of Sage Ranch, last time we spoke, you mentioned that Altus was doing an update to the valuation of Sage Ranch. And that made me think, because currently, and due to the followed accounting policies, the value of Sage Ranch remains completely hidden on the balance sheet, as the land is booked at cost rather than showing the current or discounted value of the full project. Does this update of Altus means that the assets will be booked at project value and then reviewed quarterly from now on, or in some time in the future, or is just an update to commence a project?
Well, the update's been requested by Voya. We did sign a renewed financing agreement with Voya. You know, I spoke to several shareholders who feel that, you know, that it wasn't newsworthy to publish that. Everybody on social media is focused on the PDP, but we did sign a renewed deal with Voya, I think 2 months ago, and we did have that news release approved by Voya as well. So I think the news release was going to go out on like July the 11th, but it was basically Voya re-signing for their commitment to provide $40 million of construction funds. So they asked for an update from Voya, and that information was provided. That is for the bank. We know that the sales numbers used in January 24th, 2022 were $280 a square foot. Voya had made it $272, but the current inventory of smaller homes brand new doesn't exist. But the few that do exist from both Tehachapi and the surrounding area for the smaller homes, the key is smaller homes, because you can buy bigger homes, you know, at $280 or $290 a square foot. But for a smaller home that we're going to build in Tehachapi, that price is now $309 a square foot. So we have about a $30 increase in the sales price. And on the construction cost side, we went from $99.26 per square foot for verticals to $106. So up $6 a square foot on the construction side, and up $30 on the sales side. So I don't know how much your audience is paying attention to the US market, but 75% of all mortgages in the United States are based on mortgage rates from 3 years ago. So sub 4% mortgages. And because of that, nobody wants to sell a home. So the buying that is in the market, even though it's reduced, the buyers don't have any inventory to buy. So there's still a vast shortage of brand new inventory. And again, especially in California. So I just wanted to let your audience know that it's important to look at the pricing. Our pricing is based on the mean average of that whole region, which is $447,000. And at $300 a square foot, that ties into a 1,500 square foot home. If you look at K Hovanian, which is 4 or 5 blocks away, they have a 2,100 square foot product. They say they're selling it for $530, but when you buy the options that you have to buy, those options are done out of escrow after closing, and it adds $50,000 to $60,000 to the price. So those larger homes are going for, at the end of the day, they're going for $590,000, $600,000. So you can have an argument that, well, that's only $250 a square foot. But the bigger argument is Tehachapi is not a market for brand new homes at $600,000. It's a market for homes at $450,000. So we've intentionally scaled our pricing so that we could accommodate homes at that $450,000 range, but do so at $300 a square foot, which is roughly a 1,500 to 1,600 square foot home brand new. So that's a very specific science. If you follow a guy named Sam Zell, who's a famous real estate investor, you don't follow the price per square foot on the sale side. You follow with what the mean average is, the medium average is on the sale price. And then you adjust your prices per square foot accordingly to what that mean average price is. So that is a much smarter way to go than to build something that's out of market. You don't want to be building $600,000 homes in Tehachapi, even though K Hovanian is selling them.
All right, thank you, sir. Is there any further shareholder dilution required to get Sage Ranch into development? Right now, we're still waiting for the PDP, which will come hopefully within 1 month or 2 months. And the pre-development cost before phase 1 construction can commence, are they included in the new Voya mandate? So if the PDP gets through, do we require further shareholder dilution to get Sage Ranch into development?
Voya's mandate is split up into two tranches, a $12 million tranche and a $28 million tranche. The $12 million tranche is not based on the selling of any homes at all. The $12 million is based on building all the improvements for the project. So phase one, the roads, the curb, the gutter, sewer, water, drainage, grading, the clubhouse, and the swimming pool, the community pool, and also the water purchases. So that $12 million is a commitment by Voya that has nothing to do with the sale of even one house. And then the $28 million to actually build the homes is then contingent on the yellow report, which allows us then to take the waiting list and convert the waiting list into what's called binding purchase and sale agreements. So Voya's mandate does not have any requirement on selling any homes on the first $12 million. Their security, of course, is the whole property. They do get some bonus shares for doing that, but to us, issuing bonus shares on debt is an accretive proposition, especially when those funds are dedicated for Sage Ranch. Are we going to do any dilution down at these prices right now? Absolutely not. It's ridiculous. And it's unfortunate that big shareholders are obviously buying. I have a very good friend in Switzerland who sent me a text today that he has a bid in at 60 cents, and the craziness of this market. The big guys are watching, unfortunately, people panic and sell, and they're making money. They've been in the deal for years now, and they believe in what we're doing, and they've been to the project, and they've been to the city, and they met all the key people, and they've taken the time to do that, and they've made investments of millions of dollars each on the company, and they look at this as an opportunity, and they feel it's not their job to push the price of the stock up because people are panicking. That's not how investors work. I think the investors work when people are panicking. That's when you want to buy. So we do have, I think, a lot of misinformation that's going out. Unfortunately, it's hurting a lot of shareholders, small shareholders especially. But I think this is where your video cast, I hope, Sven, can bring some comfort that the projects are more advanced than they've ever been. And Sage Ranch is waiting for its PDP from the city, and the city's spending time approving it, meaning going through the document, the 9,000 pages, and making their summary. And there was holidays in the month of August. We've lost some key people at the city for a few weeks, but the city is 100% motivated to approve the PDP and have the project go forward. So we're extremely close. At the same time, our stock's at the lowest price it's ever been in 12 years. So that's probably, unfortunately, how the market works sometimes.
Yes, indeed. It's quite a small company. So yeah, all the eyes go to the big companies. So that's where opportunities can arise. I also saw on LinkedIn that there was a new city planner hired for THP and probably started somewhere in August. So that's good news. So maybe that guy can assist, I think it was Jay Slosser, his team. So yeah, maybe after the holiday period and when he is onboarded and when he has had a look at the major PDP files, and maybe he can do his work, and then we can have the special meeting or the planning commission meeting probably in September or October, perhaps. What's your thought about that?
Yeah, I mean, we initially tried June, and they weren't ready in June. The last item they wanted was a matrix, a color matrix. They literally wanted the color codes for each house to be embedded in the precise development plan. They want to make sure that if we cash out on the project, let's say 3 years from now, that the person buying the project, national builder, doesn't come in with a substandard product, because you know, people just have their own ideas of what they want something to look like. The city has spent so much time on the PDP is they want to make sure that whatever they put in front of the planning commission and for approval, that those designs, and again, I don't mean designs and sketches, I mean 100% engineered drawings. They want to make sure that everything that was put in front of the planning commission actually gets fulfilled. They don't want any deviation, you know, and they don't want houses to look different that were scheduled to look a certain way. They don't want colors to look different. So the city wants to be comfortable that whoever steps in the position of this project, because remember, this is a 7-year project, and there's nothing legally that stops us from selling the project, you know, 3 years from now to a national builder to finish off, you know, 500 homes, because the land values have gone up even more. And, you know, there's a few $100 million on the table for us. They want to make sure that that party that potentially could buy Sage Ranch doesn't put their own ideas and alter the design of the project. So they wanted a project that is 100% engineered up front, and there'll be no changes to that. And we followed what the city wanted by doing that. And also we provided the 100% drawings for all the improvements for all the other phases. So we didn't just do this for phase 1. We did it for phase 2, 3, 4, 5, 6, 7, all the way through. So it's important to know that. And the city was not ready in June. They knew they were going to lose people in August. They were shorthanded. They said they were shorthanded. They did hire somebody, and that person is helping Jay in processing this document. When you think about it, you had one planner. You have a project that needs 8 hours a day for 2 or 3 months straight, and that person can't do 8 hours a day on Sage Ranch because there's a whole other set of issues in the city to deal with, including managing the staff that's there. And that's what Jay's job is as well. He's the chief engineer, so he looks after a lot of other people and projects as well. So we do have a planner, full-time planner now that's hired. And I would think logically that September would be the month that that they would call a meeting for, and they can do that at the very end of the month. So it's not, they can schedule that in anytime that they want to get this thing approved.
Okay, thank you for all those updates, Jeff. A last one, can you tell any update about the water dispute that's going on for Sage Ranch, or actually between the city and the water district?
Yeah, sure. I mean, I'm part of all the settlement negotiations. I see all the documents. I know what the water district is up to. I know the weaknesses. The city has made it clear on all of the public presentations to the newspaper that this project is going ahead regardless of the water district's litigation. We've had legal opinions provided to Voya that the water district cannot shut down this project. Cannot shut down this project. The biggest thing that I can tell the shareholders through this video is I've seen the settlement documents. There's several things that should make the shareholders feel very comfortable. I've seen the settlement documents, and the water district has stated in the settlement documents that there's enough water for Sage Ranch. So what the water district's asking the city is, after Sage Ranch, is to scale down the growth of the city. The water district initially said that if you grow, then, and they put this on paper, if you grow by 1%, you can build Sage Ranch. We will drop the lawsuit. The city came back and said that the science, that does not support the science. So the city and Golden Hills and all of the other water all of the other service districts, meaning all of the other water utilities in the valley of 38,000 people, they told the water district, the water district, you hire the best professional geohydrologists in the state of California. You hire them, you pick that person, we'll pay for it, but you pick that person and let them decide what the growth rate is of what the growth rate, what the water supply will support in terms of an annual growth rate. And so the water district hired a professional hydrologist, one of the best in the state, and that person came back in a report at 2.4%. The city said in its water report, 2.3% is what the city could grow by. And the water district says, but we only want you to grow at 1%. The water district's own consultant said 2.4%. So now the water district doesn't want to release that report. Unfortunately, that report is with the city. So as soon as the city publishes that, and they're 3 years late, by the way, in publishing their 5-year water assessment, their whole case is destroyed. So the water district's in a very, very tough position because they conducted litigation that they're not going to win, and they have facts in their hands that completely destroys their case. So, you know, the last correspondence that I've seen, to be honest with you, was the water district saying, okay, we'll agree to 1.25%, and then you pay our legal fees, you know, of a couple $100,000. The city said, forget it. Like, you know, if you go to court, you're going to lose. So again, the city is the sponsor. The court that approved this project was the city council. That was the court of first instance. The water district's trying to appeal that decision by going to court. So in essence, the city council is the first court making that decision. Now the water district wants to go to a judicial court to overturn the decisions of a city based on science. And now the water district has no science to support them. So they're in a very, very bad situation. That is why that you keep on seeing all the time the city saying in the Tehachapi newspaper that it's unfortunate the water district has made this litigation, and it's unfortunate that they've done this, but this project is going ahead. The developer can go ahead with the project. The city wants this project to go ahead. And our lawyers do not feel that any judge is going to stop this project based on the water district's litigation. So with that in mind, the project's going ahead. It's just going to cost the water district a lot of money, and it's not going to go anywhere. So listen, water litigation in California is like it's like buying a hamburger, right? It happens every second. It's the constant battle of California for the last 60, 70 years. It happens all the time. Water districts are looking after their own interests, because the same thing with Tehachapi. The water district is run by guys that own farmland, and they lease out their farmland to agricultural food companies. And the law and the water district's own law states that municipal interest takes priority over farmland. And so the water district is constantly breaking the rules by trying to give water for their own personal use, for their own personal pockets. But unfortunately, that's a conflict of interest, and there's no law that supports them. So this is an old battle between a mentality that's 100 years old, large scale industrial farms, and how you're supposed to be living in the year 2023. If you want to live in the year 2023, you got to build new homes that are energy efficient, homes that use 300% less water than they did 20 years ago, solar panels on the roof. And if you want to have farming in the community, you should have what's called community farms, hydroponic farming. You can't have farms that are 5,000 acres that flood the whole ground worth of water. 90% of that water evaporates. And then when you sell the crop gets put on an airplane and gets shipped to China. And meanwhile, all the revenue to pay for that water came from the people that live in the city. So this old mentality from the water district is just not, it's not contemporary to what's happening in 2023. So the water litigation is going nowhere. It's not going to affect Sage Ranch or stopping or slowing down Sage Ranch at all.
Okay, thank you for all that context, sir. That's great news to hear. Okay, that'll be all for today, I think. That's all we have time for. Any final notes for you, Jeff?
No, it's, you know, I can't give financial advice, but this is, if you don't buy, if you have money, you don't buy Greenbriar now, you're missing an opportunity that's crazy. These prices are absolutely ridiculous. They're so low, it's crazy.
Okay, thanks. Goodbye.
Thank you.
Bye.
Bye-bye.